If your fixed rate is ending, it's likely on expiry, you'll be put onto the bank's standard variable with no discount. This was the case for one of our customers, Bridget, whose fixed rate was about to end. Before the expiry, we were able to negotiate her a great discount on her variable revert rate, saving her $8,989 in interest in the first year alone, all while staying with her current bank. Watching this video until the very end, you'll learn the exact strategies in how to get yourself a better deal, all while staying with your same lender. So keep on watching. Step 1, renegotiate. If you have a mortgage broker, it's best to email them to get this done for you. It's going to save you a heap of time, and if you're time poor and don't have a great mortgage broker, then you can reach out to us and we'd love to help. Otherwise, your first step is to calculate your loan to value ratio. And this is an example on why it's so important. ING is offering different rates for the same product, all based on the LVR. The lower it is, then the higher the discount the bank offers and the lower your interest rates. Head on over to onthehouse.com.au and from there, find the value of your home. Once you have this, head on over to our calculator and find out your loan to value ratio. And once you've done this, note it down. In a perfect world, you'll also remember your original loan application and what the loan to value ratio was on that. Let's say you're a first home buyer and you bought your home with a 10% deposit. Then you'll already know that your original loan to value ratio was 90%. Being armed with this information makes you seriously dangerous because it means that the bank will likely have you still on the original LVR pricing tier. So if you're now at 80%, it means you have wiggle room and a negotiation tactic. Your next step is to find your revert rate the bank has for you. In general, it's best to jump on a call with the bank as it's going to be very hard to find this online. It's also important to understand that in this initial call, the sole purpose is to gather as much information as you can. Right now, do not try and negotiate with the bank as you're ill prepared. On this call, what you want to find out is a couple things, including what the current product you're on, the interest rate that you're currently receiving, the loan to value ratio on your profile, if you're on a fixed rate, what the revert rate will be, so what is the rate when the fixed rate ends, and the product that you'll receive upon expiry of your fixed rate. The next step is to find out what the bank is offering new customers. Here's an example. Make sure the product offering is comparable, mainly from the LVR and the loan limit standpoint. Now, armed with this information, you're ready to negotiate with your bank. Here's the script you're going to use when you call your bank. Hello, I'm hoping that you're able to help me out. I've noticed that on your website, you're offering new customers interest rates as low as 4.88%. with loan to value ratios of 70% or less. Right now, I'm on a fixed rate which ends on the 1st of March and the revert rate is set to 5.7%. I've completed a valuation online and can see that my loan to value ratio would be under 60%. I've been a home loan customer for the past 4 years and I'm hoping you're able to do something to secure my business. By being well prepared and ready to rumble, the bank knows that you're not here to play around. You'll be surprised at what offers the bank will be able to pull out of their hat. Step 2, different loan products. If at first you don't succeed, try and try again. So you weren't successful in step 1, or you're hoping to get an even lower rate than the one you got. Changing products is a great way to achieve an even better result. Julie and Brian are customers of ours who recently did just this. Having been unsuccessful in getting a higher discount on their basic variable home loan, we looked at whether or not changing to a different home loan product would save them money. After negotiating the bank's package variable home loan, we were able to secure them a much lower rate, and by changing home loan products, whilst there was an annual fee, even after this was taken into consideration, it still saved them $7,798 in the first year alone, all while staying with their current bank. Firstly, banks will generally have 3 different products: a fixed, a package, and a basic. Each bank looks at the world completely differently. Some banks will allow you to transfer from, say, a package variable to a basic, and others will only let you transfer from a basic to a package. So at this point, it's best to get your options either directly from your banker or broker, as to find this information out online is near impossible and the bank's websites are far from clear. These are the questions you want to ask your banker or broker so that you know you're making the right decision. What are all the products I'm eligible to transfer to? Of the products, are you able to negotiate a higher discount? What will be the best interest rate on each of the products you've presented? How will the products you presented differ from the one I'm on? After all the fees are taken into consideration, am I better off, and how much better off am I on each product? And will I be able to keep my offset and redraw which I've saved up, if applicable? Step 3, refinance. So if all else fails, you can always look to refinance, and it's a great way to save money. Right now, there's never been a better time because there's so many lenders offering things such as refinance rebates, which will cover all your costs in refinancing and switching your home loan. And if you are looking to refinance and looking for a great mortgage broker, here at Hunter Galloway, we can help. We service Australia-wide and don't charge a fee. Reach out and contact us online at huntergalloway.com.au or call us on 1300 088 065. Thanks for watching, and until next time, I'll catch you then.